Good afternoon, everyone. Thank you for joining today's Ask Me Anything session on SR&ED credits, SR&ED tax credits. My name is Christina Wood, and I'm the Director of Programs for the Start and Scale group here at Communitech. And I'd like to go over a few housekeeping items before we dive into today's session. So today's session is being recorded, and you can find all of our past Ask Me Anything sessions on communitech.ca. We ask that you please use the chat feature to ask any questions that you have today. We do welcome all of your questions. However, our speaker today, Jerry, will be going through his presentation first, and then we'll be fielding questions following that. But feel free to jot those down or start putting them into chat throughout the presentation, but we'll get through the presentation before we turn things over to the questions. And this session is meant to provide general guidance. So if you do have specific questions related to your SR&ED tax credits or applications, Jerry's happy to take those questions one-on-one. So you can definitely follow up with him. He will put his email address in the chat, and you can reach out to him to ask those specific questions, and we'll try to keep things more general for today's discussion. We do have an Ask Me Anything session next Tuesday, Amplify Your Employer Brand with external candidates. We run Ask Me Anything sessions every Tuesday at 2, and I wanted to make note that we do have OKR Financial coming to speak to our audience on March 23rd at 2 p.m. Regarding SR&ED financing. So it's kind of like a follow-on session to today's topic. So I did want to make mention. So that was March 23rd. We have OKR Financial coming to speak on SR&ED financing. And so I'd like to, with that, turn things over to Jerry Fung with Northbridge Consulting, and he will walk us through everything we need to know about SR&ED tax credits. And he's also happy, as I mentioned, to take all of your questions at the end of today's session. So with that, I will stop sharing my screen, Jerry, and you can put your slides up and we'll get started. Thank you.
Thank you, Christina. Let me share my screen. Okay, can everyone see that? Am I good?
Yep, that looks good, Jerry. Thanks.
Thanks, Christina. Thanks, Amanda. So I'm here today to talk to you about scientific research and experimental development tax credits, or SR&ED for short. My name's Jerry Fung. I've been working with clients on the SR&ED program since 2003. So that's 18 years of experience with SR&ED tax credits. I've been through various manifestations of the program. My background's in computer engineering. I'm also an accountant as well. I have my CPA designation. I'm based out of the Kitchener-Waterloo corridor, and the bulk of my practice revolves around information communications technologies. So I deal with a lot of software clients. I was just giving an overview of what I'm going to talk about. I have about half an hour of material prepared, after which I can take any questions. You can enter questions in the chat box at the end of my presentation. So the things I'm going to talk about today are, I'm going to give a brief overview of the SR&ED program. Then we're going to spend about 10 minutes on SR&ED eligibility and what that means from a CRA perspective. The third topic I'm talking about is SR&ED audit trail and what the CRA requirements are there. And then finally, I'm going to talk about how to allocate costs properly, followed by funding overlap, which is a big concern because of all the subsidies being doled out to businesses recently. And as I said, I have about half an hour left for questions afterwards. Anyways, let's start with an overview of the SR&ED program. Scientific research and experimental development is a tax credit program. It's the largest incentive program in Canada of its kind. It's about a $3 billion program. And the purpose is to incentivize Canadian businesses to conduct R&D in Canada and to increase the technology base of Canada itself. It's administered by the Canada Revenue Agency. And to qualify, generally speaking, you need to be conducting work in Canada, and you have to file a claim with your tax returns within 18 months after your fiscal year end. What are the SR&ED benefits? Well, it's a federal tax credit that's also that's also involved. That it's a federal tax credit, but each of the provinces are involved as well. And at the federal side, there's two types of tax credits. One is the enhanced tax credit, and one is the non-refundable tax credit, the basic tax credit. Most of you will be applying for this enhanced tax credit because it's fully refundable. This is one of the huge differentiating factors between ourselves and the US because they don't offer refundable tax credits in the US. Basically, to qualify for this refundable tax credit, you have to be a Canadian-controlled private corporation, and you have to be below 10 million in taxable capital. If you don't qualify for this, you will get the basic non-refundable tax credit, which has to be applied against income taxes owing. Right, so it's less attractive because you have to be profitable before you can realize these non-refundable tax credits. Each province also participates as well with their own incentive programs. Most of the provinces follow along with the determination by the CRA, with the exception of Quebec, who actually conducts their own audit at the provincial level. And Alberta just recently introduced this new innovation grant, details which are still pending right now. So Alberta's innovation grant is supposed to be very lucrative, but we'll know more in the coming months. In terms of eligible costs, generally speaking, what we're looking at is the SR&ED program covering your in-house labor, your payroll, overhead cost for those directly participating in SR&ED activities. This can be directly claimed or 55% of your labor in terms of a proxy. Material cost, subcontractor costs, which need to be Canadian taxpayers themselves. And I'll talk a bit more about subcontractors later, as well as third-party payments, which are agreements with research institutions, such as universities, where you share in the benefits. My tax agreements that Amanda deals with would be good examples of these. So you can claim your contributions towards third-party payments for SR&ED purposes. The things that are excluded from SR&ED tax credits include commercialization efforts. Commercializing something for the sake of doing so doesn't qualify for SR&ED. Capital cost. All these eligible costs must be current in nature. Foreign contracts. They're not Canadian taxpayers, and admin labor if you're already claiming the proxy, right? You can't double claim on the overhead cost. In terms of SR&ED timeline, typically speaking, if you make a SR&ED claim, you need to be doing work up until your fiscal year end to track your SR&ED activities. Then you make your SR&ED claim, and the CRA typically gets back to you in a 3-month time period. However, if it's accepted as filed, to get your return quickly within 1 to 2 months. However, typically speaking, if there's any audit activities after your submission, it can take longer than this 2 or 4 months. For example, if you're to submit your SR&ED claim, it can take the CRA 3 to 4 months to contact you about a review or for additional disclosures. You then have to schedule a date to discuss matters with the CRA, and then the CRA will have to write a report with a determination, and then you won't get your refund for another 1 to 2 months. So it can take up to 12 months to get your SR&ED claim if there's any review or disclosures required from the CRA. This is why next, I think in a few weeks, we'll talk about SR&ED financing. There is an ability to realize your SR&ED claim now at present without waiting this 12 months. And you can borrow against your SR&ED claim or your upcoming SR&ED claim, almost like taking a line of credit against your SR&ED. But that's a topic for the next Ask Me Anything section, or a subsequent Ask Me Anything session. I won't dig into the details too much. Okay, let's talk about SR&ED eligibility. This is the bulk of what I'm going to be talking about. From a CRA perspective, there's been a lot of deliverables recently sent out for SR&ED eligibility and software. I'm going to summarize some of what they're talking about in their workshops here. But generally speaking, the first thing you have to be aware of is from a SR&ED perspective, you have to claim in a field of science, right? You have to be advancing in field of science such as computer sciences, electrical engineering, biotechnology. The CRA has a list. You have to start with those fields of science. You cannot claim in ineligible fields such as psychology, with the exception of drug studies, social sciences, business sciences, etc. Right? Having introduced a feature that no one has worked on before is not a good indicator of SR&ED, because that feature could be just a business advancement, for example. Just because no one's done it doesn't necessarily mean you're advancing the field of science. Anyways, these are the 5 most important criteria to evaluate SR&ED eligibility. This is what the CRA has been focusing on in the last few years. Generally speaking, they want you to identify the field of science, as discussed in the previous slide, and they want you to do an a priori search and find out what the limitations in that field of science are, right? That other practitioners in that field of science who are adequately trained don't already know about. You then have to propose a hypothesis on how you're going to get around this limitation. A hypothesis cannot be routine in nature, which leads to technological uncertainty. Example of a routine hypothesis would be, for example, I can run my app faster if I had a faster processor, right? It's kind of routine in nature. You know that, or a trained practitioner should know that. So that's not a viable uncertainty statement. The third requirement that they need from a CRA's perspective is that you have to have a systematic investigation or search. So you have to show that you resolve this hypothesis systematically through experimentation. Finally, you have to show that there's an advancement in that field of science that you can apply in your business. And then finally, you need an adequate record of all the experimentation that happened while testing the hypothesis. So just to give you an example of how this looks like in the flow chart, pretty much at the beginning, you're trying to identify a limitation, you're doing a lot of background research. You're not supposed to be claiming this for SR&ED purposes until you come across a limitation and a hypothesis statement. Once a hypothesis statement is realized, that's when you start claiming for SR&ED. All the activities related to resolving the hypothesis then become relevant for SR&ED purposes, such as coding, building a prototype, data collection, analysis of that data. Those are all supporting activities that you need that are commensurate with resolving the hypothesis. And while you're analyzing the data, you could also formulate another hypothesis, and this process starts all over again. So the key is to identify SR&ED eligible work. You need to capture this red area after the hypothesis is formulated. Just some quick examples. The CRA regularly talks about benchmarking. Benchmarking existing things in the market is not necessarily eligible for SR&ED. That's a routine activity. However, if you were to do something with the existing piece of hardware or software, such as forming a hypothesis and how you might help vision impaired people detect objects through vibrations, right? Then that hypothesis would be eligible for SR&ED purposes. Website design is not eligible for SR&ED because it's an art. However, if on the back end of your website, you're dealing with priority scheduling of transactions for real-time distributed databases, then that would be a hypothesis worth claiming for SR&ED on. Again, we talked about routine data collection. Data collection on its own isn't relevant for SR&ED purposes. It's data collection that's tied to resolving a hypothesis and analysis of that data that you should be claiming SR&ED for. Purchase of a laptop, capital is not eligible for SR&ED. A laptop can be capital or it can be current. A capital expenditure would be of a laptop where it would be used for developers to write code. That's a capital cost. There's a recurring cost there. On the other hand, if you incorporate a laptop into a robotic prototype, then that prototype could become something that you scrap for SR&ED purposes, and in that context, the laptop could be part of a SR&ED claim because it's a material cost that's not capital in nature. Anyways, those are some examples I threw in for SR&ED eligibility. Moving on, I'm going to talk about the SR&ED audit trail and what this really means. When you're working on SR&ED throughout the year, you're supposed to be accumulating these repositories, the red and the blue and the left, contemporaneously. You're supposed to be recording your hypothesis statements, You're supposed to be recording logs of all your experimentation contemporaneously. And then you're supposed to be accruing costs for all these experimentation activities. What the CRA wants you to submit in your SR&ED claim is a summary of all of this. They want a summary of your hypothesis, a summary of your experimentation, and then a summary of your cost allocations. This goes into what's called the T661 form, which is submitted with your tax return. Now, the CRA can go back and ask for any one of these details in the repository after the fact through a disclosure request or through an audit. So you have to maintain that. All right. The SR&ED claim is not just the application form itself; it's also all the documentation that you have on the back end to support it. Right. And I'm going to go through these repositories in further detail. First of all, the one thing the CRA really recommends is that you should record what your hypothesis is and date them. You should also save all your a priori searches to prove that your hypothesis is a viable one, that you actually have a limitation. This could include research papers, white papers, patents filed, websites, blogs, all dated to show that they predated your identification of a hypothesis, right? And then you should date your hypothesis and record it the moment that it's determined, because that is the onset of your SR&ED project, right? All activities after that point that are commensurate with that resolving that hypothesis then become eligible for SR&ED purposes. In terms of an audit trail for experimentation, this is really important from a SR&ED perspective. The CRA requires that you prove that you're conducting viable experimentation. And this can be in many forms, right? They don't specify how this evidence needs to be recorded, but for some of my clients, it's through a project management system, such as Jira, Confluence, Asana. If you identified the hypothesis correctly, then you can tell your development team, tag all relevant stories and epics by hypothesis. Then it's really easy to show an audit trail in that regard. This audit trail for experimentation can include internal wikis, white papers, R&D meeting minutes, notebooks, emails, whiteboard photos. The CRA doesn't specify what it must include. It's really up to you to create a process that makes sense for you to track SR&ED. The second thing the CRA requires is some sort of labor allocation that's reasonable, right? The CRA typically recommends time tracking, but many small businesses, startup companies aren't able to adopt time tracking just because it's too much overhead. In lieu of time tracking, you are able to provide a reasonable allocation from your experimental artifacts, assuming that your experimentation logs are in order. I'm going to talk more about this in a subsequent slide in terms of what this entails. Just to reiterate, experimental and labor allocation logs need to be contemporaneous. You should be recording these logs in real time throughout the year. I think there was an initial question about contractors that was sent in. These logs apply to contractors as well, right? You need to also prove that your contractors not only were participating in eligible activities, but also that the costs involved with these, or some subset of these costs, are relevant with these activities. There are other stipulations you have to realize from a contractor perspective too, in that they have to be taxpayers, Canadian taxpayers, and you, the claimant, have to have the right to exploit the IP for you to claim SR&ED. Only one of the two parties can claim for SR&ED, either you, the company, or them, the contractor. Keep that in mind. You can be audited just on that. But I digress. It is important to log everything contemporaneously because it's very difficult to recreate these logs after the fact. One, because employees leave, and two, because employees have difficulty remembering what they did a year ago to recreate this audit trail. If you keep these logs contemporaneous, it's very easy to file your SR&ED claim right after your fiscal year end, which then accelerates your cash flow. And it makes it much easier to finance your SR&ED claim too, because now you have accruals. You can determine what your accrual year to date is from a SR&ED purpose, which helps a SR&ED financer. I'm going to talk briefly about cost allocation because I mentioned that the cost allocation must be reasonable. I'm going to give some examples to explain what I mean by this. Of course, the CRA always asks for time tracking. But what they're really asking for is time tracking by SHRED project and not time tracking by business project, right? In the business project, some subset of that might be SHRED eligible. They want you to try to track the eligible portion of your business projects. Some examples of reasonable labor allocation might be allocating some time, some finite time to every ticket where an employee is referenced that's relevant to SHRED. That might be a reasonable allocation basis. Much more reasonable than saying all of his time was spent on SHRED or half his time was spent on SHRED. That's not a granular enough allocation base, and the CRA will reject those allocations if you don't have an adequate basis. Another example might be allocating time between Git commits based on relevant repos. That might be deemed reasonable by the CRA. On the other hand, if you're just allocating time between creation dates and closure dates of tickets, that might be deemed unreasonable, because how do you know what the developer was doing when they opened the ticket January 1st and closed it December 31st? That doesn't mean you can allocate a whole year of labor to that employee, right? So those are just examples and we'll go over. I'm just going to wrap up with a quick couple of slides on government funding overlap. This is very crucial to be aware of these days because there's so much government funding being doled above and beyond just SHRED. But if you receive reimbursement for any of your SHRED eligible expenditures, you must declare what other funding you receive for those expenditures. And these reimbursements will be deducted from your pool of SHRED expenditures. These government funding overlaps could include other tax credits that receive reimbursement for, other government grants. This can be things like IRAP or payroll subsidies like CEWS, TWS, IAP from IRAP, or it can be a non-interest bearing loan. The only thing you don't have to be concerned about are interest bearing loans, because those are not considered government funding because you're paying market rate interest, right? So if there's any overlap on your SHRED expenditures from any one of these other government sources, you have to deduct that funding that you received that overlaps with their SHRED pool of expenditures. Just to give you an example of this, let's say you spent $100,000 on SHRED labor, but IRAP also provided a $75,000 grant to subsidize that same labor that you're getting SHRED for. So how you calculate your SHRED expenditures is you take your $100,000 of labor, you claim your overhead, which is $55,000. So normally you'd have about $155,000 of SHRED expenditures, but because of this IRAP, you have to deduct the 75 that you received, netting you out the 80,000. Keep in mind that this IRAP overlap didn't actually affect your overhead proxy because IRAP's not reimbursing you for proxy. So there's still benefit to be obtained from SHRED, even if you're typically getting funding from other sources. So that's something to keep in mind. You just have to keep track of all your other government funding subsidies and calculate the exact overlap you have with SHRED going forward. This is something that I imagine they'll be auditing, especially with all the COVID subsidies that they've doled out recently.
Jerry, a question has come in regarding the loans specifically. So are FedDev loans considered too low or no interest loans and therefore should be deducted?
Yeah, it's a good question, Christina. So about FedDev loans, FedDev loans are interest free. So they are considered government subsidies. This was was upheld by the tax courts in an Alcoa case out in the East Coast. So you do have to declare what portion of your FedDev subsidy overlap with their SHRED expenditures. The caveat is you can claim those expenditures after you repay the loan in the future, is how the CRA has been dealing with this. So that's a great question. This is actually all the material I had. So I'm going to wrap up now and circle back around to the questions. And let's follow up on that.
We do have a few questions in the chat, so if you want to just finish out your presentation,
Sure. Okay.
and you'll put your contact information up, and then we can get to the questions.
Anyways, I just got to tell you a bit about my firm. I am a partner at Northbridge. I've been working with clients for over 18 years now, and especially on the SHRED program and other government incentive programs as well. But with SHRED services, we offer piecemeal services for those that are in sourcing SHRED or working on SHRED internally. And we also offer comprehensive services for those that want to outsource SHRED. But our comprehensive service offering is quite detailed. I work with many clients contemporaneously to identify SHRED eligible projects, to document these processes, to document the experimentation, to set processes to track everything properly. I help on the application side as well to write those summaries, submit them with their tax returns, allocate costs sufficiently, and also help on the auditing end to if you do get reviewed by the CRA. That's something that our comprehensive services entail. So enough said there. Pretty much I'm here if you have any questions for me. That's my email address if you want to contact me. I'm also on LinkedIn if you want to reach out to me there. I'll take any questions you have, Christina, at this point.
Great. So to the audience, if you have questions, please pop them into the chat and we'll go through them now. And then, as I mentioned at the top of today's session, if you have very specific to your business type questions around why your claim has been rejected or those types of things, feel free to connect with Jerry one-on-one after today's session, as today's session is being recorded. So the first question is, any specific insights that you have related to software development and what is or is not acceptable for SHRED? So I know you went over a few examples of eligible versus ineligible, specifically related to software development. Any guidance there?
Okay, so the main issue with software development is software development on its own is rarely a SHRED project, right? Software development is part of a larger context that can be a SHRED project, right? And that's been the main issue with claimants dealing with the CRA, right? I wrote some code, it allowed me to accomplish this feature. And then the question from the CRA is, where's your technological uncertainty? Any trained practitioner in computer science could have implemented that feature. Is an argument you'll get from the CRA. So in the past, a lot of people talk about gray areas with software. The CRA has really tried to remove these gray areas in their latest information circulars, which they distribute through their workshops, right? And their stance is prove that you have a hypothesis statement that's linked to a limitation, and then we can talk about all your software development, right? So the fact that you wrote software doesn't guarantee you SHRED eligibility. You actually have to conduct that a priori search to determine what is it about the software that you developed that's advancing a field of science. How are you improving the state of knowledge base of computer science or mathematics or computer engineering, right? Or statistics? How are you advancing those fields of science? What is a hypothesis statement to get around a limitation? So as long as you can frame it using their framework, you're good from a SHRED perspective, right? So I think it's just a different way of thinking about what you've accomplished, getting away from the business aspects and the features you've implemented, thinking about pure science. What is your scientific hypothesis that you're actually trying to resolve? It's usually not, can I add this feature, right? Because that's a business accomplishment. Does that make sense? I guess I'm not sure if I answered the question or not because it's hard to see feedback.
Renee, please put in the chat if that helped answer your question or if there's any additional information that you need. Thanks. The next question was from Gary. So back to the top of your presentation when you were talking about the proxy method, he's asking, is the proxy method of claiming typically the best method?
It's a good question about proxy. So I would say the majority of the time, the 55% proxy is more than what you can capture through the traditional method of directly capturing overhead. This is because most SR&ED claims are labor intensive. So 55% of labor is actually usually quite substantial compared to you manually claiming cost. The only exception is if you have a business that's very capital intensive where there's immense overhead. For example, you're building nuclear reactors or something like that. Then I can see there being a substantial amount of overhead. Or if your SR&ED claim is only contractors, you have no employees, then you might consider the traditional approach of capturing overhead. But if you have a pure contractor claim, base claim, you have other issues with the CRA because you have to deal with your experimental logs and also who owns the SR&ED tax credit. But I digress from that. Hope that answers your question.
Good so far. The next question is, should I consider both IRAP and SR&ED, or is one sufficient?
That's a good question about IRAP and SR&ED. I'm an angel investor myself. I'm involved with many startups. From a startup perspective, I would always advise you take as much government money as you can get, right? Don't shy away from one or the other. Make sure you leverage both SR&ED and IRAP. It's a key differentiating factor you have, and one of the main reasons why you're situated in Canada as opposed to the US. Without IRAP and SR&ED, why would you situate in Canada, right? It's the largest incentive and the number one reason why you should have a startup in Canada is IRAP and SR&ED. So take advantage of them both. The caveat is IRAP is more difficult to access if you're pre-revenue. They do have some revenue requirements, so you may not immediately be eligible for IRAP. SR&ED, as long as you incur the eligible expenditures, you're eligible for. So make sure you take the SR&ED tax credit. When you start to generate some revenue, apply for IRAP as well. Yes, IRAP will grind your SR&ED claim, but there is still benefit from both programs, right? IRAP never can cancel out your SR&ED claim because IRAP does not pay for overhead expenditures. So at the very least, you'll get this 55% proxy from the SR&ED program. Does that answer the question?
Yeah, I think we're good. Going back to your comment around loans. So somebody here, Florence, is asking for clarification. So for loans, do you mean the interest-free part that's considered funding, or the capital to be considered funding? So I think she's asking because typically a loan, the company has to pay back.
Yes. So with a loan, there's usually a principal that you borrow, and then there's potentially interest you have to repay, right? With FedDev, there is no interest. You're just repaying back the principal, right? I'm not exactly sure I understand the question, to tell you the truth. She might be asking about some of the capital that's reimbursed, right? If you're borrowing money, sometimes let's say you have a loan from FedDev, you're borrowing money to repay capital cost and also labor cost, right? If they're paying you back capital, then that does not overlap with their SR&ED claim because you can't claim capital cost for SR&ED anyways, right? So you have to determine the portion of that loan that's reimbursing your SR&ED labor. So let's say you borrow $1 million from FedDev interest-free, half of it reimburses you for capital cost, maybe 25% of it reimburses you for professional fees. That's not related to SR&ED, and only 25% is actual labor cost, reimbursing you for labor cost. And out of that 25%, that's $250,000. Some of it is relevant to SR&ED, some of it is not relevant to SR&ED. Determine what the overlap with SR&ED is, and that's the component, the funding you receive for that, let's say 25%, that you have to deduct from your SR&ED pool of expenditures. I hope that answers the question.
I think so. If it doesn't, Florence, oh yes, it does. She's good.
Yeah. Oh, By the way, someone also mentioned that IRAP technically doesn't have a revenue requirement. It's technically true, but a lot of ITAs, industrial technology advisors, are preferring to work with companies that have revenue. It's a preference from the ITAs, even though their official stance is yes, anyone without revenue can apply for IRAP funding. You also have to keep in mind that I'm talking about IRAP funding proper. IRAP is also affiliated with many other programs. For instance, COVID relief through IRAP is called IAP. That's a completely different program than the core IRAP funding. That's for emergency assistance, right? And of course, you don't need revenue to apply for emergency assistance from IRAP. IRAP is also affiliated with other government organizations, such as a youth employment program. They have CanExport, a loose connection to them. So there's other ways IRAP can get you funding as well outside their core programs, right? And there's also NRC as well, which IRAP is affiliated with. Anyways, I digress. I think there was some more questions, right, Christine?
Yeah, we have another one here. So this one is focusing on a little bit on the actual form that companies fill out. So do we have to focus on wider project level uncertainty in the first section of the form, or can we also cover FYI 2020 level uncertainty? And so then the second part of the question is, we have claims that use both formats this year. I just wanted to ask if it matters.
Okay, let me see where wider project level uncertainty. The first section, we cover fiscal 2020 level uncertainty. Okay, so I'm not exactly sure I understand the question, but I'm going to try here. Okay, if you're talking about wider project level and fiscal level uncertainty, okay, so I think there's a lot of confusion about what a technological uncertainty actually is, right? I think in a lot of trade claims I've read, people generally confuse business features they're trying to accomplish with technological uncertainty, right? A technological uncertainty is a research hypothesis, right? You shouldn't have that many research hypotheses, although there are probably many things you're trying to do. You're trying to let your product meet specification A, specification B, specification C. That's not really a technological uncertainty, because you could meet that specification by conducting routine practices. So you're supposed to do some background research, talk about the core technological uncertainty or limitation you're trying to resolve, and summarize that in the first 242 section of the T661, right? Often it's recommended that you have multiple SHRED projects. You should have a different SHRED project for each technological uncertainty if possible. Especially if you're accruing a lot of costs, because it makes it easier for you to unravel all the different technological uncertainties and to specifically cater to each one of them. So I guess I think I'd have to get a little more detail about from the asker of this question to really understand what they're trying to ask. It might be more case specific, so I can definitely spend some time after the fact with, I guess it was Ankar.
Yeah, so they just sent a note that they'll follow up with you directly.
Sure. I think I have to understand what they're asking before trying to, because I'm really trying to answer it generally right now.
Yep, no problem. The next question, is there a minimal amount of potential SHRED refund that would make it worthwhile to seek help from consultants such as yourself? So at what point should a company engage a consultant?
I would say feel free to talk to me regardless. I think at the early stages, sometimes you can follow your SHRED claim yourself. You just might need a bit of advice. Feel free to reach out to me. I think it doesn't hurt to talk to a SHRED practitioner anyways, just for that feedback. It may not make sense for you to outsource the SHRED engagement to me at an early stage though, however, right? If you don't have any employees, for example, there's really not much for me to work with, but I can definitely give you some advice. So always feel free to reach out to me regardless.
Perfect, thank you. Can founders be claimed for SR&ED purposes?
There is an issue with founders, just because you own a large amount of equity in the company that if you have a controlling stake, for example. The CRA has a definition called specified employees, and that any employee over 10% of the company is then a specified employee. And then different rules apply for those type of employees. First of all, you have to pay yourself a salary to be claimed for SR&ED purposes. The moment you have equity in the company, you can no longer pay yourself as a contractor because you're no longer arm's length, right? So as a founder, you have to keep in mind that if you want to take advantage of the SR&ED program, you're going to have to pay yourself a salary at some point.
Perfect.
Is there any other questions? Or have
I don't see any coming in, but if any of you have additional questions, please put them in the chat. We have about 15 minutes left to answer those. Jerry, I'll go through some of the questions that you've given me in advance. So how has the CRA been structuring audits during the pandemic?
Okay. It should be noted that last year, let's say from April until November or so, the CRA was not able to conduct any audits because their employees were unable to work. So all claims from, I'd say, April until maybe October were accepted as filed. So that's great benefit to whoever claimed for SR&ED, right? No scrutiny. However, they are now starting to onboard the CRA staff again, and they are conducting virtual audits now. So I've seen various manifestations of this, ranging from phone conferences to Cisco WebEx calls. So they are starting to ramp up audits again. And the caveat is those claims that were accepted as filed last year, they reserve the right to audit at a future date. They just didn't have the resources to audit them at all. So just keep in mind that I guess the free pass is starting to come to an end. I think they're going to have the capacity to audit this year, and I've seen several audits already.
On the note of audits, Jerry, I'm curious what advice you have for startups who may be being audited. Is there anything that companies can do to prevent audits other than keeping, as you mentioned, very detailed notes and paper trail? But is there anything else, any other advice you have to either prevent audits or to help companies go through an audit?
Yeah, that's a good question, Christina. From an audit prevention perspective, there's several things you can do to mitigate the risk of audit. The first is keep an audit trail, right? Often the CRA will ask for sample disclosures before a full audit. If you can provide those documents to them, it reassures them that you're in compliance and they may not audit you. The CRA audits according to an internal risk assessment, right? So one of the factors of the risk assessment is your submission itself, right? Your T661 submission. If it reads well, it will reduce your chance of being audited. If you took the time to identify viable technological uncertainties, then they're more confident that you're compliant. If you just copied and pasted your business plan, then they'll probably audit you, right? The size of claim is a factor, has been a factor in the past, but they're starting to look past that now. It used to be a larger factor than it is now, because they don't want to give startups a free pass anymore just because your SR&ED claim is small. So you can get audited with a small claim, even though it might be less likely. Your track record with the SR&ED program is very important as well. Your prior communications to CRA, if you can convince them that you're compliant, you're less likely to get audited in the future, right? The CRA is doing a lot of first-time claimant advisory services where they're trying to educate you, or they'll give you some preliminary feedback on your SR&ED claim, but it's not binding. right? They're really trying to educate startup companies more so than audit them to death these days, I find. So if you're receptive to these education sessions and you can show that you're compliant with the recommendations, some of which I've gone over in this presentation, you're less likely to be audited. I think those are the main factors that contribute to frequency of audit. But you have to keep in mind that they do have an internal objective to audit 1 of every 5 SR&ED claims, right? So there is a random draw that will happen, and if you're lucky enough to be drawn or unlucky enough to be drawn, you will be audited. So sometimes you get audited for no apparent reason, even though you're completely compliant and you have a very strong track record this CRA. I had some clients that have no problems with the SR&ED program. They're completely compliant, but they're just randomly drawn, and the auditor is just told to audit. Right, so that happens too as well.
One other question with, the rise in folks working from anywhere and hiring employees, across the globe as everyone's working virtually, does that have any impact on SR&ED claims? So for employees who may be doing R&D work outside of Canada, can that be claimed for SR&ED purposes?
That's a very good question as well. So you're allowed to claim employees for SR&ED purposes working outside of Canada, but it can be no more than 10% of your total SR&ED claim, right? So there is a stipulation that allows for that because the CRA understands that you may have to send your employees to work on site at a client on location, right? But this only applies for Canadian employees, right? Not for third-party contractors and the such. Right, so there is a small stipulation there, but the requirements still apply to the employees working outside of Canada. You have to show that their activities are commensurate towards a SR&ED hypothesis. You still have to prove that.
Okay. Any last questions from the audience before we wrap up today's session? Anything that you'd like further clarity on? Feel free to put those questions into the chat, and hopefully we were able to answer everything on your mind with respect to SR&ED, as we know it's that time of the year.
Feel free to email me after the fact or hit me on LinkedIn if you want to talk about your specific case.
So just a reminder that today's session is being recorded, and you can find the recording at communitech.ca. So if you search Ask Me Anything sessions, you'll get the whole list of all of our previously recorded sessions. It takes 1 to 2 week turnaround time for us to get those loaded up onto the website. We will also send a follow-up email with Jerry's slides and contact information. So again, if you want to reach out to him to have a further one-on-one conversation, he welcomes that. And as a reminder, on March 23rd, we'll be having OKR Financial join to answer all of your SR&ED financing questions. So that's a follow-up session to today's SR&ED session with Jerry. Sounds like that's all of the questions. I don't have anything else coming in from the audience. So thank you everyone for joining this afternoon. Enjoy the snow out there. Stay safe on the roads if you're going out, and have a great week, and we'll see you next week.
Stay safe, everyone.
Bye.
Bye now.